every year I look at, hey, where my time was spent, where could I have done better? I'm always reminded of, hey, the most precious resource I have is time. Every minute I have has an opportunity cost. And is the time I'm investing, is it getting the best return? People overestimate what they can achieve in 1 year, and they underestimate what they can achieve in the 10-year time frame. Now, this is a quote I always spend some time marinating on when it's time for me to review my goals for last year and then set my goals for the upcoming year. And so I wanted to share this goal on my annual investing podcast because this quote really resonated with me this year. Ever since the market has changed, about 2 years ago, I've been in pivot mode. I've been pivoting as an investor. How I'm investing deals, what type of deals I'm keeping in my portfolio. I've been pivoting what I've been doing as an investor. I've also been pivoting as a real estate entrepreneur on how I structure deals and help people invest in real estate deals. Well, right around the middle of 2024, I felt both of those shift from pivot more towards like stabilization. Hey, we had the details figured out, the ships had been turned, and now we are just in stabilization and optimization mode. So it felt really good as an investor to start reaching the light at the end of the tunnel, so to speak. And I wanted to share that quote because I know many other investors, they've been pivoting their business. They've been pivoting as investors the last couple years as well. And while a lot of times it feels like we're not making a bunch of progress in 1 year, once I took a step back, like the 10-year, it gave me a different perspective, which was very beneficial and helpful to me. So as you're out there planning your goals, I would really recommend you spend some time marinating on that quote. All right, so let's get into the 2024 goals review, what I accomplished and what I did not accomplish. So one of my big goals for last year was to sell 2 rental properties, and these were in Aurora, Colorado. So I sold them and I redeployed them across 3 passive investments. Now, the reason I did this is because return on equity matters more than low interest rates. And I say that because so many investors are hesitant to sell properties with low interest rates. And these 2 condos were both sub 4% 30-year fixed mortgages. They had great interest rates and they cash flowed decently. Here was the major problem for me though. My return on equity was about 9.5% in each one of those condos, which isn't horrible, but also isn't great. I like to see my return on equity in the 15% or greater range, so I know my equity is working hard for me. So I did sell those condos in March, and I successfully redeployed it across 3 investments. The first was into Property Llama's multifamily value add fund. Now, at the end of 2024, this multifamily value add fund's portfolio consists of over 800 units across 20 properties in Colorado and Iowa. The second investment I made was into Dynamo Capital, which is a private credit fund where they lend primarily to investors in Kansas and some other Midwest markets. And the third investment was into a 54-unit single-family home development in Arvada, Colorado. So, that's how I deployed about the $250,000 I had from selling those 2 condos. Besides putting a little money aside for taxes in the future, I deployed it across those 3 investments. Now that the money's been deployed, I'm reflecting back, am I happy with the move? And it is a resounding yes, I am. And one is the financial aspect of it. Number one, so far, the deals I'm in are performing as expected or actually better than expected. So financially, I'm very happy so far with the returns. Secondly, from a return on hassle standpoint, I am very happy as well. Now, I had a property manager for these properties, but still took time to manage a property manager, deal with stuff, just filing taxes and all the upkeep on the LLCs. So I'm very happy I was able to remove all that. Now, I'm happy to keep all that if I'm getting a great return. But since I can get a better return without all that, I'm very happy to have that off my mental to-do list. And actually, like 2 days ago, I dissolved the 2 LLCs for those properties and some other paperwork, and it just felt good to be done with that admin stuff. So the next part of my goal in 2024 was to roll over a big part of my IRA into my solo 401k. So I had a traditional IRA invested in a lot of stocks and bonds, mostly like an S&P 500 type index fund. So I rolled it over to a solo 401k, which allows me to invest in real estate and also other alternative investments. So I rolled the money over, and now I've also successfully deployed that across about 10 investments, primarily all in real estate and a lot in multifamily value add, a lot in multifamily ground up, and some various debt funds as well. So I've been very happy that I made the change because I started making the change in quarter 1 of this year. And I got everything deployed by the end of quarter 4. So that was a big, mental shift for me for rolling over, a good chunk of my stock portfolio. But after seeing the investments I've made and how they're, some already performing, I'm very happy with the fact that I did roll over the money and I made these investments into real estate. Now, as a side note, if you are self-employed, definitely look at a solo 401k. They are powerful ways to go out there and, put money away and go out there and invest. Or if you have an old IRA from a previous employer, look into the power of self-directed IRAs. I started doing this a couple of years ago. I've been very, very happy with it. So keeping the pivot theme in mind, one of my goals was for better diversification with my own investments. A couple of years ago, I had the realization that I was highly concentrated in Denver between my primary residence, all my rentals, my businesses. The vast majority of my net worth was within the 10 or 20 mile radius of my house. So obviously there's good and bad about it, and also achieving that next level of wealth building. It's like, wow, I got to start figuring out other ways to diversify and rebalance. So I've been very focused on 3 aspects of diversification last couple of years. The first is geographic diversification. I love Denver, but I don't want all my eggs in one basket. So I've done continued to make some investments in Denver, but shifted some to Colorado Springs and quite a bit to various Midwest markets. The second area I focused on has been sponsor diversification. So these are the operators who are running the deals and managing the projects. So I wanted to get various sponsor diversification for a couple reasons. One was so all the investments weren't reliant on me. And I knew I could go out there and find people that had better teams and better expertise than I did in various assets. And also to be in a different market, there's no way I can replicate the expertise someone has in Kansas or Iowa. So I'd rather invest the money with them where they have their expertise and built out niche. And, it took a while for me to understand, the power of investing with sponsors, having diversification. But all the groups I invested with, I think they all had employees in the range of about 10 to 60 people. So these are like operations. These are businesses. They have, leadership. They have proven systems. They have their areas of expertise. And it's simply the type of efficiencies that I can achieve as a solo investor. Now, the third area I was focused on was capital stack diversification. By capital stack, I mean, hey, the money that someone needs to bring to a deal. And that's usually on equity, which is, down payment, and then what the bank is lending to you on the loan or credit side. So throughout my entire investing career until a couple of years ago, I've been very focused on the equity side. And at some point, I was having a conversation a couple of years ago with someone that does a lot of lending. And the way he explained it, the light bulb went off for me. I was like, oh, wow. I understand how being the bank works. I understand the importance of, being the lender. I understand the importance of diversification. So that light bulb went off, and that is what got me focused a lot more into debt funds. So I like the diversification. I like the play right now in the current market cycle. And also from a hands-off standpoint, it's the only type of real estate investment that I see out there. I can be passive, but still earn double-digit type cash-on-cash returns. So I feel very good about the diversification theme and how I've diversified my portfolio so far. Now, as I wrap up my 2024 goals, I want to emphasize that those moves are right for me. They may or may not be the right moves for you based on your risk tolerance, your expertise, and where you are in your investing journey. So that is a big reason I want to invite you to our annual Portfolio Analysis Mastermind. This is our 4th one that we're kicking off on January 8th. And it's the perfect opportunity to go out there so you can reevaluate, understand how your portfolio is currently performing, and then make the appropriate moves so your portfolio is optimized, so it's performing better, or you move the equity into some better investments based on your goals and your risk tolerance. So like I said, this is our fourth one, and every year we do it, we always improve upon the last one. So I'm really excited about this year's format. It kicks off in January. It'll be done by the end of January, and it has three main parts. The first part is understanding how your portfolio is performing. The second part is we're going to have some in-person masterminds where we can all get together in the same room and share our portfolios, share our goals, and share our frustrations. And the third part is we'll be doing a deep dive into the type of real estate investments that make sense in Denver and make sense in 2025 and beyond. So right now we have 7 types of investments that we've been researching and looking at and some investing ourselves the last couple of years. So we'll go through 7 strategies. Some are actively owned rentals in Denver, some are turnkey out-of-state rentals, and some are passive investments. And we also got some other tax advantage types of investments that are not 1031 exchanges. So I'm really excited about this. I think this will be our best one yet. So go check out the link in the show notes and register for our January 8th kickoff. All right, now moving on to my 2025 goals. I feel like for the last couple of years, these goals are much more simple and I have a lot more clarity around it. And that's probably me moving from pivot more to stabilization mode as I kind of go through that arc as an investor myself. So overall, my strategy is focused on the same areas. I really like multifamily and I really like being the bank through debt funds as well. So I'll be investing in more, value add multifamily and more ground up construction multifamily for, brand new vertical buildings, build to rent subdivision communities. But I really like the multifamily play. As I mentioned earlier, I also really like investing in debt funds right now for their double-digit cash-on-cash returns. They're a lot more liquid than most investments. And I think for the current market cycle we're in of high interest rates, they make a lot of sense. So the biggest move I want to make is actually to sell my Westminster fourplex. I had this goal in 2024, but I just could not make the stars align to get the right investments I wanted to. But now after going beyond just 1031 exchanges, I feel very confident that I will be listing this property in Q1 and then reinvesting in some tax advantage type of investment. So at the top of the list right now are a couple of Colorado Springs multifamily deals that happen to be in qualified opportunity zones or QOZ or QOF funds. I don't have the time to talk about it, but I will be doing a future deep dive with my numbers and investments here in the near future. But the punchline with QOZ deals is a lot of people say they are like a 1031 exchange, but better. So I'm getting some bigger assets, they're growing, and also have a lot of tax advantages as well. So I will continue my passive investment strategy to achieve diversification. So as I have, money I save, money that comes in, I will continue to reinvest in multifamily deals and credit funds. I'll continue to reinvest dollars in my solo 401k as well. And I like that because I'm achieving great returns right now. I'm achieving diversification, but also it is just simplifying my life. I like to spend as much time as possible either with my family. I have 3 young daughters and an amazing wife, and I love spending time with them. Or I'd rather invest that time into my businesses, like Property Llama, where it helps people go out there and invest and structure their portfolio. So I get a much better return on my time in those 2 areas. So that's why I'm continually focused more on the passive investing strategy. All right, now I'll end on this note. A key lesson that I really focus on as an investor, and I think is one of the macro trends going on right now, is that investors need to get a lot more familiar and comfortable with partnerships and also doing bigger and more complex deals. It's just very hard right now to be a solo investor, to go out there and find a deal like we used to do 5 years ago. It's just hard to make those numbers work. So if you're an investor like me, where you have some capital, not much time, I would encourage you to look at how syndications and funds or investing in partnerships may allow you to grow your portfolio while minimizing your time. Now, if you're in a different part of your investing journey, or you have some expertise for doing deals, that will encourage you to look at how to structure partnerships so you can bring capital to those deals, so you can bring talent, so you can bring the right skill to those deals, so you can go out there and execute bigger and more complex deals. I just think the next market cycle we're in, there's will be a big emphasis around partnerships. and doing more, complex and bigger deals as well. Well, this wraps up my real estate investing goals for 2025. So again, if this inspired you to go out there and review your portfolio or start doing your goal setting, make sure you come out and register for our next Portfolio Analysis Mastermind. It kicks off January 8th and it is free.